what a Roth IRA is, it's an account. Many people are familiar with IRAs and 401ks. They've probably had them most of their working lives. And when they retire, they most often roll them over to an IRA account. But Uncle Sam is a partner. When you have an IRA, Uncle Sam's your partner in that, and they're going to take their cut. So I always suggest trying to get rid of that partner as soon as you can because the longer you wait, the more they're going to get, right? So the strategy goes, you want to convert that IRA to a Roth because a Roth IRA grows tax deferred much like an IRA, but the money that's in a Roth is after tax money. And it grows tax deferred, and when the money comes out of the Roth, it's tax free. Okay, so you take the tax cut, take the tax hit up front, on the back end it's all tax free. So the question I always ask my clients, what would you rather tax, the seed or the crop? Tax the seed, right? So that's the philosophy behind that. Yeah, timing is crucial. You have to look at, the more time you have the money in the Roth IRA, obviously the more it can grow. Timing also has to do with the markets. If the markets are down, it's a great time to convert that IRA to a Roth. If your income's down in a particular year, it's a great way to turn that IRA into a Roth at lower tax brackets. So yeah, timing is a very important component. I recommend that clients convert their IRAs to Roth IRAs over several years for several different reasons. The primary reason is tax bracket control. We have a marginal tax bracket system, which means that the more income you have, the higher taxes you're going to pay. And it doesn't mean all your taxes are at that tax rate, just you can bump up to the next level, go from 22 to 24%, for instance, and that income in that 24% bracket is taxed at 24%. So my goal for a lot of my clients is to keep them in the 22 and 24% bracket. So by spreading money out over several years is much more easily done. And that's why we do it that way. There are hidden costs when you want to consider a Roth conversion because my average client's 70 years old. Of course, we're in Sun City West, so that makes sense. One of the things many people think about and they're concerned about are their Medicare premiums. And that's based upon, there's a thing called IRMA, and that is what affects how much you pay for your Medicare premiums. The more income you have, the more you're going to pay for Medicare premiums. So it's very important to be careful and watch those limits. Of course, you want other taxes too, like bumping up to the higher tax brackets, if you're not careful, can happen quite easily as well. There was a time when you could convert a IRA to a Roth, and then all of a sudden the market would drop and you'd be allowed to redo it. You can have a redo. You can no longer do that, unfortunately. But it does mean if the market does drop, it's a great opportunity now to convert your money from an IRA to a Roth, because when the market recovers, which ultimately it will, you'll have that money grow back tax-free. With the tax law changes we've had in the past decade, one of the big changes, and it's being affected right now to a lot of people. This year, the IRS came out and made clarification with inherited IRAs. People weren't sure if they had to take out money each year from an inherited IRA. Everybody knew you had to have money out within 10 years if you inherited an IRA. But now the IRS has made clear that you have to take a little bit of money out every year and have it all out by the end of the 10 years, okay? So if somebody has a $2 million IRA and they have one beneficiary, that means that's $200,000 a year minimum that has to come out of that IRA. And that can be a lot of taxes. So by converting money to a Roth now, and I'm doing this with quite a few of my clients, you're avoiding that tax problem down the road, because Roth IRAs can stay tax deferred for the entire 10-year period. And once again, there's no taxes on that. Well, you want to be able to talk to, obviously being a CPA is very important to be able to do tax planning, but investment management is also a very key component to this. If your investment guy is not talking to your CPA, who's going to get hurt by that? Ultimately, it's going to be you. So it's very important to work with somebody who has an expertise in both areas. Okay, yeah, there is not one size fits all when it comes to Roth conversion, because I have clients that are single, I have clients that are married. Here's an example. A married couple. I try to get Roth conversions done while both spouses are still alive because the tax brackets are much more favorable. If one of the spouses passes away, all of a sudden now the surviving spouse is subject to higher tax rates at lower income levels. So it's important to consider that. How many beneficiaries there are ultimately of the IRA accounts determines how fast we should convert those IRAs to Roth accounts as well. So those are a couple examples. In 2026, there are some tax law changes that are set to expire. The Trump-era tax cuts are set to expire in 2026 unless Congress can extend them. And who knows? When it comes to Congress, there's a lot of things they don't agree on these days. So planning right now, I'm trying to get a lot of people to get things done before 2026 because of the uncertainty around that.